here. Alright, what's up everyone? Today we're going to be talking about a few things. Most of all, we're going to be talking about risk management, profit taking, averaging down, and some basic portfolio strategies that you can test out and see what you like the most. Before we get started though, I just saw this news from the CNBC Now Twitter that TD Ameritrade is going to allow Bitcoin futures trading starting Monday. Now, that is pretty huge news. TD Ameritrade is the largest futures operating broker in the US, maybe around the world. So aside from CME, which is another huge derivatives and options online brokerage, TD Ameritrade is going to be allowing futures. We saw what happened last week when the first futures launched. When CBOE futures launched, the site crashed within 5 minutes. Bitcoin bounced 8 to 9%. So I think we're going to see the same kind of thing. I think as soon as these futures launch, we're going to see it hit the limit breaker. The way that the futures work, there's volatility limit breakers at 7, 13, and 23%, I believe. So basically what happens is if Bitcoin moves more than 7% in the day, the volatility breaker will hit, and then essentially futures trading will halt until the next trading session would be the next day. So I think that when these futures launch, we're going to see the same kind of thing. Instantly, we're going to see a 7 to 8% rise in Bitcoin, followed by a few percent fall. And I'm mostly in Bitcoin right now. I'm not holding many else except my long-term holds leading into this futures launch. I think in about 2 or 3 hours from now. Did the stream good? Everything's working? I don't know what just happened. I think 2 or 3 hours from now, we're going to start to see a price increase. That's when Asia is going to wake up. It is Saturday there. Dropping frames. Hold on one sec. Connection should be good. Let's see if I can fix this. Are we still lagging? Gotta get rid of that lag. Good now? Alright, I think my internet just cut out for a second because Xfinity hates me. So, anyways, I'm not going to get too much into the futures. I'm actually learning a lot about futures right now. I just bought a few books, and I'll be doing a stream on trading futures in the next week or two. So, let's get into what I wanted to talk about today, risk management and profit taking. A lot of people are consistently asking me, when do I take profits? What does my portfolio look like? And how can they kind of reduce risk? So I'm just going to give you guys some basic tips, maybe a few different strategies that you can try. Like I always say, everyone trades differently. Everyone's going to be successful using a different strategy. I'm going to start off with the strategy that I use first. I definitely wouldn't recommend this strategy to a new trader. I trade with a pretty high risk portfolio. I think the best way that I can do this is just a notepad. So I'm going to start off with my portfolio strategy. Like I said, this is just what works for me. Historically, I've had problems doing low risk strategies. So depending on what's going on with Bitcoin at any given time, I'm automatically holding 20 to 30% of Bitcoin, Litecoin, and Ethereum. So 20 to 30% of my whole portfolio is going to always be in the top 3. This is actually really, really low. I would advise you to usually have over 50%. Some people even do up to 80% if you have a low risk portfolio, but this is what seems to work for me. That means I have 70 to 80% in altcoins. Now, how do I break down these altcoins? Like I said, I'm high risk. I'm in cryptocurrency. I trade to make big profits. I feel that my portfolio is not big enough to a point where I can just get low risk coins, maybe a lot of staking coins, and just kind of ride by and chill. I'm looking for big profit gains. I want the life-changing gains. Obviously, along with this, there's a lot of high risk, and you have some mornings you wake up pretty down, and you gotta just know how to deal with it. And like I said, you gotta learn how to take profits, and you have to learn how to minimize risk. So before I get into how I take profits and minimize risk, I'm gonna go through a couple portfolio strategies. So I'm gonna break down my altcoins. I would say that about 50 to 60% are mid caps. What are mid caps? If you don't know what a mid cap is, we're going to go to CoinMarketCap. A mid cap, in my opinion, is anything in the top 150 coins. So I'm going to go to a full list. Not top 150. I would say 150 to 50. Those are the mid cap coins, in my opinion. So we're looking at, just going to give you guys a general idea. We're looking at things like KuCoin, an exchange that I use, ViaCoin, Extra Bytes, one of my favorite. If you watch my video a couple days on Extra Bytes, it was at around 350 sats. I think it's pushing 900 sats now. I think it's going to keep on going up. But this is the market cap that I'm looking for, because these market caps, really between 50 and 200 million, they're coins that are pretty, usually they're pretty far off. They're either far off or they're brand new, just finished the ICO. And these are the ones I see with good potential to grow. And on top of that, they're not as risky as a really low cap. Like if you're looking at a 500 to 1,000 on CoinMarketCap, that's where you're going to get these high risk coins. These are called low caps. I would say a low cap is anything with between $1 million to $10 million market cap. These ones obviously have the most room to grow, but they are by far the most risky. You know, a lot of these end up being scam coins. You could wake up and it could be down 80%. So I'm going to break this down more. 50 to 60% in mid caps, 15 to 20% in low caps. These are really scattered. When I say 15 to 20% in low caps, I'm holding 10 to 15 of them. You know, these are really risky, and the way you diversify them is you hold a little bit of a lot of them. And then if one of them goes up 400, 500%, which can happen no problem, you're going to be able to be profitable even if the rest of your low caps go down 5 to 10%, because they can really swing anywhere between 30 to 50% in a day, and it's kind of usual because the volume on them is so low. Hey Lauren, good to see you in here. I actually just talked to her a lot about cryptocurrency. She's looking to get into the game. You know, she's curious what Bitcoin is, and I'm getting a lot of these questions every day about how Bitcoin works and why it has any value. That's a video that I'm going to make tomorrow or the next day. It's going to be a pre-recorded video. You know, you can show your parents or someone older that has absolutely no clue what Bitcoin is, and it will give them a really basic idea. Anyways, so we're at about 70 to 80% of my altcoins, and in the last 20%, I usually will put in my top 3 picks. When we're looking at the mid caps, this is usually between 5 to 10 coins. These are most of my longs, you know, Lux, Raiden, QSP, Aeon, all my favorites. So that's about 5 to 10 coins. This will be anywhere between 5 to 15 coins. And then this 20% right here that I put into my top 3 picks, these are usually my make or break coins for the week. You know, as you guys know, I put out a newsletter every 2 weeks of coins that I really believe in. And so when I'm putting 20% into my top 3 picks, that's almost 15 to 20% of my whole portfolio. And it's really risky. It's a strategy that I've found to work out really well. And, you know, they're projects I do a lot of research on. I'm really bullish on them, and I really believe in them. So this is my portfolio breakdown. Like I said, this is a high risk, high reward portfolio. This is something that you definitely don't want to be in during times now when Bitcoin's running. So a lot of you guys notice that I exit my alts really quickly, and that's because of the portfolio that I'm using. You know, I have this extremely risky portfolio. So as soon as Bitcoin starts to run, you know, if my alts take a 5 to 10% hit, my whole portfolio is going to be down 8%. So as soon as I see any bullish indicator of Bitcoin breaking out, I will sell almost all of my alts, or I will at least reduce my position by 50%. So before we get into profit taking and averaging down, I want to show you guys a portfolio that I would really recommend for a beginner. So beginner portfolio. This is going to have low risk. But you're also going to be able to profit a decent amount from it. In this portfolio, you're going to be holding a lot more. You know, you're not going to have to be on the computer all day. You're not going to have to be watching charts. You're going to buy basically at strong support levels, and then you're going to hold until you see trend reversals. So this is a low risk good reward. And like I said, this is a portfolio that if you're new to crypto, you're going to want to make this kind of portfolio because it has turned out to be one of the most profitable low-risk portfolios that I've seen and talked about. So, you know, try it out if you're new. And then while you're trying this out, you're going to have plenty of time to get more introduced to altcoins. You're going to be able to do research, and you're going to be able to catch up because you're a little bit behind in the whole crypto market. So I'm going to break this down. We're going to want to be 70 to 85%. I'll make this easier. 70 to 80% in Bitcoin, Litecoin, ETH, or top 20. Now, when I say top 20, like I said, CoinMarketCap, the absolute best website to find information on different coins. Top 20 is going to be basically the top 3 coins, or the Coinbase coins. And then things like Dash, Cardano. I've been talking about ADA a lot. It's doing great, up 81% this week. I hope a lot of you guys picked it up. Monero, I think Monero is going to break out soon, you know. All these people that are new to cryptocurrency, the mainstream, they're all just buying coins that they've heard about. That's why I think we saw this Ripple breakout so crazily, you know, and IOTA breakout when they announced that Microsoft partnership. That who knows what happened with that. But so these are the coins that you're going to see break out next, especially Monero. I'm going to open a large position in Monero after Monday when we figure out what's going on with Bitcoin. Same thing with Neo, Qdom, Waves, even into the top 25, OhMySgo. A lot of people from the mainstream know about OhMySgo. So you're going to want to put 70 to 80% in your portfolio in the top 20. Now you're asking me, why do you want to put such a high percentage in the top 20? These are the least volatile coins. If you look at the 1 hour and 7 hour, you're not going to be down very much. Like on a bad day, which we all know Bitcoin's looming to break out again, the top 20 coin that is the most down is Ripple at 7.7%, and it's up 200% this week. So that's not down at all. If we get down to these mid caps that, you know, I personally hold a decent amount of my portfolio, and you're going to see a lot more volatility. You see 20%, 18%. I mean, obviously there's some big gains too, but as you can see, it's a lot more risky to be holding these mid cap coins. So then, how are we going to break down the rest of your portfolio? If we're in 70 to 80% of top 20, that means we are in 20 to 30% altcoins. Now, this is going to be much different than my portfolio. Of your 20 to 30% altcoins, you're going to want to be, let me write altcoin breakdown, just to make this easier. You know, someone might just be skipping through this video later, and then they can just see my Word document. I'll also post this later, the video and the Word document. Altcoin breakdown. You're going to want to be 80% in, actually, probably more than that. I'd say 90% in mid caps. And you're going to want to be holding anywhere from 5 to 20 of these, really. You know, the more you're holding, the less risk you have, the higher chance you have of getting one that is going to be, you know, have that 10 to 20% or 10 to 20 times breakout over a couple months. And lower chance that, you know, if you're just holding 1 or 2, you could wake up, there could be some bad news about it or a big sell-off. You could be down 25% on that. So 90% mid caps, and then I would say 10% low caps. And you're going to want to be holding 10 to 20 of these. And as a new trader, it might be a little bit more difficult to find low caps. So that's really how you're going to learn to do research, though. By using these low caps, you're going to have, you know, 10% of 20%. So you're going to have only about 2% of your portfolio in these low caps, and they're going to teach you how to do research. You know, when you're picking your own low caps, you're going to be able to figure out if it goes well or if it doesn't go well. Why did this go well? What was wrong with my research? Was there something wrong with the team? You know, you're going to have this write-up that you did yourself, and if the low cap turns out to be a horrible failure, you can go back and look at it and compare it to your successful ones. Why was this one a failure and why was this one successful? Again, if you're just listening to someone else's calls on Twitter or in a Telegram group, you can be successful trading, but you're not going to learn, and you're never really going to be able to figure out what problems you have and why you're having these problems. And MPOV, one of the best traders out there, approves of these strategies, so you know what's going on. I'm going to look in comments for a sec just to see what I missed, if there's any questions about the strategy so far. At the end of the stream, I will be answering questions like usual, whether it's about altcoins or trading strategies. Morning, Gat. Morning, Dal. BitConnect. Yeah, I'm not going to get into BitConnect. Give me some sick music. No music today. We're just going to be talking about risk management. Great topic for the live stream. Thank you, Benjamin. Love to see you in here. I've been seeing you in here a bunch, and I hope you're learning. What's the book about futures you're reading? It's a textbook. I can post a picture of it later, and I can show everyone. I haven't read much of it. I'm only about 2 chapters in, so I can't really tell yet if it's a good book or not. Smash the like button. Yes, please thumbs up. Please subscribe. I'm glad I made you some good money with Extra Bytes, Lawrence. I still see that going much higher. What's in the cup? Probably jungle juice. I'll let you guys think about what's in my cup. You know, it's 5 o'clock here, 5:15 here, and it's Friday. Can you do I'm drunk and going to lose all my money type of portfolio? I wouldn't recommend trading drunk. If you want to do I'm drunk, I'm going to lose all my money portfolio, then try my portfolio out. Very high risk. You know, you're not going to sleep very well at night, but you can make good money on it. You can lose a lot of money on it. What about ICOs? You technically save your money in there too. So I don't do a lot of ICOs because I don't like having my money locked up. You know, if you did an ICO a month ago, if you put in Bitcoin and there's a predetermined price based in USD, you know, Bitcoin's up 200-300%. So when those coins come out, they're probably going to drop a lot, and you're going to be losing Bitcoin. So until Bitcoin's very steady, I'm not doing a lot of ICOs. There's very few that I recommend. I talked about Bread ICO. I'm going to be doing that one, and then I'm in Legolas, which is a bank-backed exchange, and that's going to be a pretty good one. What is a good amount of money to start off with? Okay, this is a great question, actually. So a lot of people have been asking me how much they should invest in crypto, and I'm kind of getting a lot of texts from people I know that are saying, I have this much money, what should I put it in? And I think that the best way to get into crypto and invest is start off with maybe 10% of the money that you actually want to put in, and just buy Bitcoin, Litecoin, or Ethereum. You know, hold one of the 3 coins from Coinbase and get your feet wet a little bit. You know, if you don't want to miss out on the train, if you think it's going to keep on exploding, then you can buy a little bit blindly, but only put like 10% of the money you want to invest in it, and then start doing some research, figure out if you believe in crypto, and really figure out what you want to invest in, what projects you believe in, and just, you know, you don't want to be investing blindly. So another reason I recommend only putting in about 10% of the money you want to use or actually invest in crypto is because there's bound to be dips. So if you put 10% in now, and then Bitcoin goes up 100%, that's cool, you're up 100%. You know there's going to be a dip. So on the dip, you can put more money in, and you can kind of just slowly build your position. Because then if there's going to be a very serious dip, you know, we've seen Bitcoin historically drop anywhere from 40 to 60% at times. You're going to be able to build the rest of your position and get in at a much lower price, and that's called averaging down. I'm going to talk about that later. Is Hextra going to external exchanges? I believe it will be listed on Coin Exchange within the next month. They're doing that Hextra Coin Gold thing on the 25th, and I think after that they're going to be listed on a few exchanges. Lowest bankroll you think you need to get started in the beginner portfolio? You can get started with any amount of money. That's the cool thing about crypto. It's not like a stock where you have to buy a whole stock. You can buy 0.001 Bitcoin, and if you don't have a lot of money at the time, you can kind of just ride it out and see what's going on. Do you prefer to hodl altcoins or long-term? I'm not a long-term holder. I'm a Bitcoin maximalist. If you notice, alts are down significantly over the last few months, even though they're up in terms of USD. So I just like to make my Bitcoin profits and get out of them. What's up with Ripple? It's just mainstream FOMO. All right, let's get back into one more portfolio, and then we're going to talk about profit taking and averaging down, and then we'll be done for today. So I'm going to call this the let's do trying to give it a good title. You know, we got the beginner portfolio, my portfolio, which is high risk, and then let's go the usual portfolio. This is a portfolio that you're going to see most people that have been in crypto for a little bit using. It's pretty safe. It's a little bit more risky than the beginner portfolio, but you can get some serious profits with it, and it's relatively safe. The typical portfolio. So in this one, you're going to be holding between 50 to 70% in Bitcoin, Litecoin, and Ethereum / top 20. Now, why such a wide range of 50 to 70%? This 50 to 70% is going to depend on market sentiment. You know, this portfolio is for someone who's been in crypto for a little bit. They understand the market. So when Bitcoin is bullish, 70%. When it's hashtag alt season, 50%. So you're going to want to be kind of swing trading with the money that's in your top 3, top 20 position. You know, when Bitcoin's bullish, you want to reduce your alt position, you take profits on those, and then you're going to be making some good money because you're going to go into Bitcoin with 20% more of your portfolio, and then, you know, you wait it out. Once Bitcoin starts to reverse, you put that into alts, and then your alt positions are going to be at a way lower price. It's called averaging down again. You know, whatever position you already have, you took some profits on it higher, and then you bought more at a lower price. So you have a better entry, and you've already made money on it. For the 70% Bitcoin, Ethereum, Litecoin, do you recommend equal thirds of each? No. This is going to be, so I'll put some notes up here. The top 20 distribution is typically going to be at least 50% Bitcoin. So what that means is if you're holding 50 to 70% of your portfolio in the top 20, you want at least 25 to 35% in strictly Bitcoin, because Bitcoin can randomly break out. When Bitcoin breaks out, even Litecoin and Ethereum seem to drop because they trade in terms of Bitcoin, of course. So you're going to want to be holding at least 50% of that top 20 position in Bitcoin. And this will help you reduce risk, and then this will also give you available Bitcoin in case Bitcoin spikes up like crazy, alts drop, and you want to increase your position. So this will leave us with 30 to 50% in altcoins. And this breakdown is actually going to depend on you. You know, I would recommend 70% plus in mid caps and 30% plus in low caps. Actually, I'm going to do 80% mid caps, 20%. 20% or lower in low caps. So this will just depend on the trader. You know, you're more experienced, you know how to do research, you have personal picks, you know, you're not just following signals trying to learn. So, you know, you're going to want to have between 5 to 15 mid caps, 5 to 15 coins, and then, you know, between 5 to 20 of these. You might say, some people are going to ask me, you know, it's a little bit difficult to be holding this many coins. How do you hold them? You know, just get a hardware wallet to hold your top 3. There's actually hardware wallets that hold a lot more than the top 3, most of the top 20. So, you know, when you have 50 to 70% of your position in this, you want it always in cold storage, offline. You're not going to really be trading this. The most you're going to be moving of this is 20%. When Bitcoin goes up and you think it's going to reverse, that's when you're going to move 20% into altcoins. So this is going to be in cold storage mostly. Same thing with your mid caps. You know, 30 to 50% in alts, you're only going to be trading about 20% of your portfolio. This means that these are mostly midterm holds. And what a midterm hold basically is, if Bitcoin's going up, you start to sell most of your position, you take some profits. What's up, Luke? Glad to finally see you in one of my live streams. You've only missed the last 5. You're not even a real good guy. But glad to see you in here, Luke. Let's get you started. You know, you're gonna want that beginner portfolio, Luke. I might even need to make extremely new portfolio for you, where you just hold 100% Bitcoin. But anyways, so these are the 3 portfolio strategies that I would recommend. Been in crypto a little bit. So before I move on, if you have any questions on these portfolios that you want me to answer, just write them in the comments. I'm going to take 1 or 2 minutes to go over some questions, and I'm going to grab some more of my drink. All right, do you recommend ICOs for low caps? Yeah, I mean, if you want to get into ICOs, then I would definitely put ICOs under low caps because they're extremely risky. Even the really good ones, still, it's just such a high risk. ICOs are considered low caps. We're gonna assume it's Jungle Juice. It is not Jungle Juice, but I love Jungle Juice. I've always been a big fan of Jungle Juice. Sorry, did you answer the question about when to start buying Bitcoin for holding? If you're gonna be buying Bitcoin and USD, I would definitely recommend waiting until after January 1st. I think the first week of January is gonna be a decent pullback. What's the ICO besides bread? I'm in Legolas Exchange. It's a bank-backed exchange. I'm going to make a video on it once round 1 is open to the public. Right now it's just in a closed round until December 25th, I believe. Alright, so now let's talk about averaging down. Which website to cash out? Depends on your country. In the US, Coinbase is the best one, in my opinion, but I haven't really cashed much out. Why do you expect a pullback on January 1st? I talked about this in one of my earlier videos. I actually did a whole video on it, but basically I think that there's going to be a lot of profit taking and shorting because people who are up big from this year, they're going to wait until after January 1st to cash out because then they don't have to pay taxes for a whole year. So I'm just going to, we're going to talk about averaging down, because this is the most important thing you need to do to make money in crypto. So, if you don't know what averaging down is, the formal definition is the process of buying additional shares in a company at lower prices than you originally purchased. This brings the average price you paid for all your shares or coins down. So, let's do some examples of averaging down because, like I said, this is the absolute most important thing you need to do to be successful in trading altcoins. You need to take profits and average down. Do I have a private coach group or something? I have a Telegram group. I used to have a Telegram group for questions, a troll box open to everyone, but I was getting too many dumb questions in it, and it was stressing me out. I was spending a lot of my day just answering the same question over and over again. I do have a new Telegram group. You do have to pay to get into it, but it's basically targeted for people trying to learn. And I'm in there all day just answering any questions that you have, giving trading advice, educational advice, help on TA, and things like that. If you are interested in that, just go to the Gem Club, and there's details about it in it. For all my calls, though, all my calls are still free in the Gem Club. I'm always going to keep all my calls free, but that's just kind of like a premium service if you have a lot of questions and want to learn. So, averaging down. Someone write in the comments what coin they want me to look at, and we'll get started that way. Mod. Okay, let's look at mod. We'll look at mod, and then we'll look at Chainlink. So, how does averaging down work? We're going to go to the 4-hour chart because I obviously love my 4-hour charts. And let's look at this. So, mod has been trading for a little bit over a month on Binance. And as you can see, there's been this huge price decline. This huge price decline is because Bitcoin has been running. So that's another reason that I'm not a holder. I don't hold alts for a long time. As soon as I get that signal from Bitcoin saying that we're about to start a bull trend, I'm immediately out of alts. I'll just close my position with small losses if I have to. I'm not messing around. So how does averaging down work? Say you were in mod pretty early. You bought right here at 24,000 Satoshis. You really believe in this project. We're going to be using the typical portfolio strategy. So you're 30 to 50% in alts. So start of November, say you're 50% in alts. This is before the really big Bitcoin run. Bitcoin's just starting to heat up. So you're 50% in alts. Mod's one of your favorite ones. You're holding it from, to make it easy, let's say you bought in at 25,000 Satoshis. So you bought in at 25,000 Satoshis. You're holding it. You're losing money. You're losing money. Now you're really losing money. It's down to 12,000 Satoshis. So my recommendation on buying in is never start with a full position. If you really want to get into a coin immediately, buy only 25% or 30% of the amount you plan on putting in. Because that way, if there's this big downtrend, you have spare Bitcoin right here. You have some spare Bitcoin, and you can pick some up at, 11,000 Satoshis right now, or even on the way down. You could buy it. You bought it originally at 25,000. It does this big drop, starts to consolidate. You think, okay, it looks like it's hit some support. I'm going to buy more. So you buy more at 17,000. You do another 25% of your position, and then it drops again. It's consolidating. It's trading sideways right here for about a week. You say, okay, looks pretty bottomed out. You finish your position here. So now instead of having 100% of your position at 25,000 and all your Bitcoin locked up, you lost over 50% on it. You bought 25% at 25,000, 25% at 17,000, and 50% at 11,000. So let's do some simple math and look at your average price. Say you're trading with 1 Bitcoin. So for mod, 1 Bitcoin worth, I recommend, you start your position at 25% at 25,000, which means that we have, we put 0.25 Bitcoin at 25,000 sats, and then you're going to put another 25% at 17,000. And, this is just a really basic example. Obviously, you need to be monitoring the Bitcoin trend the whole time because you've been in crypto a little bit. You should know when Bitcoin's going to run and when it's going to pull back. So 20% of your portfolio is being moved between alts and Bitcoin. So as soon as you see Bitcoin starting to top off at 17,000 and then 50% at 11,000.5 Bitcoin. So this 0.5 Bitcoin, the 50% that you put in, this is where you think the end of the Bitcoin uptrend is. Alts are starting to turn around. We're going to see Bitcoin consolidate or go down a little bit, and alts are going to run. So instead of your average position being at 25,000, because you average down, let's get the calculator out. You have 0.25 at 25,000, 0.25 or 25% at 17,000, and 50% at 11,000. So let's just see 0.5 Bitcoin divided by 11,000 Satoshis. That will be 0.123, 11000, 123.8. So you have 4,545 here. And then let's do, we have 0.25 Bitcoin divided by 0.123, 17123, 470. And then our last thing is we have, so I'm only going to do the math for this one. I just want to show you how powerful averaging down is. It's really helpful to see. I'm not going to be doing math on the other ones. So then we have 0.25 divided by 0.123, 25123. So then we have 1,000. So 2,470, 6,470 plus 500. We'll say you have about 7,000 mod coins. Now, if you would have bought 100% at 25,000, you would have 4,000. So your average is at like 13,000 Satoshis, or not 13,000, about 14 to 15,000 Satoshis rather than 25,000 Satoshis. Now, in the other situation where you bought this 25% at 25,000 Satoshis, if it goes up 100%, don't chase it. You just made 100% on your position. You just made 0.25 Bitcoin. So you're in the profit. So averaging down is really just a way, if you want to start your position now, you think it could go up a lot in the short-term future, just start the position slowly. You can't get greedy in crypto. There are always coins that will run. Every day there's altcoins up 50 to 100%. I'm sure you see it all the time. So you just really can't be greedy. You gotta take whatever profits you can get. The goal of the game is to get the most Bitcoin. It's not to hold the most altcoins. So, averaging down. Can you also average up? Doesn't really work that way. The opposite of that would be you start your position slowly and then you buy more as it's going up. I really do not recommend you buying more once things start to break out. You don't want to chase the pump because it can dump just as fast as it pumped. You know, if you have a little bit and it starts to go up a lot, just enjoy it. You know, you don't need to have 10 to 20% of your portfolio in it going up a lot. Averaging down is never a good thing when price is going down. I didn't say to average down when the price is going down. If you heard, I said average down when the price is consolidating and Bitcoin is moving around. I would average down right here, not on this downtrend. If you look right here, it is trading in the same thing for 7 days. So if you average down right here, there's a good chance that this is because Bitcoin's consolidating or reversing. Again, you don't want to be averaging down on these down candles. You want to average down here. It's been trading in the same price range for 8 days. So Matt T, I'm going to have to disagree with you. This is good trading advice. This is what I've been doing. When averaging down, do you increase the amount of Bitcoin for the trades? No, when you're going into a trade, you want to know how much Bitcoin you want to put into it. You want to know what percent of your portfolio you're going to be buying of that altcoin so that you can plan out how much you're going to put in at first and how much more you will put in if the price decreases and goes to different support levels. If we look at something like WTC, where it's been trading a little bit longer, we can actually find key support levels that you would want to average down at. So looking here, let's actually go to the daily just because there's less candles and we can see it better. So if we're looking at WTC or Walton Chain, on this big breakout, if you only have a little bit, that's great. Start to take profits once you think it's reversing. But you're going to want to be looking to average down where there's support. So how do you find the support levels? I'm going to show you right here. You know, this is the support level. This is where it was trading at before it broke out. You know, this became a resistance level. It dropped below it and it broke this resistance level. So that means that there's really good buy pressure in this area because it used to be a support. What happens to a support is it becomes a it used to be a resistance. What happens to a resistance is it becomes a support after it's broken. So once you see this trend reversing, you know, I see a lot of people trying to buy up here, really chasing the pump. You don't want to do that. Also, you don't want to be buying when it's dumping. You know, after this big breakout, you want to just let it finish dumping. You know, you see this sell signal right here. It's a little bit late just because it hasn't been trading for so long. So just let it do its thing. If you want to be a part of the project, then wait a couple weeks until it really bottoms out. And you're going to be looking to buy in this area again. As you can see, it took 2 months for it to get back in this area. But this is the area that I would be picking up in. There's a relatively low chance that it's going to fall below this area unless Bitcoin is having some serious breakouts. And then so this is where I would start my position. If I missed the initial pump of Walton, I would kind of let it die down for a while, and then I'm going to expand this a little bit. This is where I would be trying to start that 25 to 50% of my position. This is a solid support level. And then if this doesn't hold, which it dropped a little bit below, next support's going to really be in this area. This is where I would be looking to average down and finish my position. Using this strategy, you start your position between 55 and 65,000 Satoshis, and you would finish filling it between 30 and 40,000. You know, maybe 50% here, 50% here. And then you're going to have a really good average. Your average is going to be somewhere right in between. And then if you break out back to all-time levels, you'll be making 4x instead of 3x. How to structure all the trades. How do I structure my trades? I gave you the portfolio breakdown. You're going to be wanting, if you're doing one of these two portfolios, you're going to be wanting to put an even amount into almost everything except Bitcoin, because unless you really believe in something, then put a little bit more. When you're holding these 5 to 20 mid caps, you want to divide it pretty evenly. If there's some projects you like more, then put a little bit more into it, but that's how I prefer to do it. And the next thing I'm going to cover really quickly is profit taking, which goes hand in hand with you know, averaging down later and getting a better position. And additionally, this 20% of your portfolio that you're going to be swinging back and forth between Bitcoin and alts. Average up is how you make money. Okay, well, I strongly disagree. I don't chase coins. Matt T, if you are a professional investor, if you're like a licensed advisor, I'm not, then you should write some articles and start a channel about how to average up. But I disagree with you. I don't make money averaging up. Things dump just as fast as they go up. So this 20% that you're going to be swinging between Bitcoin and alts, when things are breaking out towards the top, you're going to want to take a little bit of profits. Even if it's a long-term hold, in my opinion, you should be taking a little bit of profits. So let's keep using WTC as this example. Actually, it's a bad example because the indicators that I like to use, it hasn't been trading long enough to see them. So let's go to some Bittrex coins because Bittrex coins have been trading for longer. ADX is a bad example. That hasn't been trading too long. Let's go to something like Digibytes. A lot of people got hurt on Digibytes. How much margin is too much margin? The only place you can margin trade is BitMEX, so I'm not talking about margin at all. So a lot of people got killed on Digibytes. I remember this is right when I joined crypto, actually, this Digibytes breakout, you know, right in May. So if you're looking at DGB, you know, if we're using the indicators that I use, you got this buy signal right about here at 50 Satoshis. Not the best example for the buy signal, but that's not what we're focusing on. We're focusing on where should you be taking profits. And the best thing, the easiest way to do it on these big breakouts is start to take profits once you see the volume significantly decrease. So if you got in, even at the start of this breakout, so between 200 and 400 Satoshis, 200 and 300 Satoshis, then it breaks out big. You know, we have these huge volume days. And then we have these days where the volume's decreasing. You know, it could go all the way back down. In this case, it went up way higher. But there's no reason that you shouldn't be taking 10 to 20% profits on your position when it's up 100 to 200%. Because, you know, in case it does go back down and drop to support levels, you're going to have Bitcoin free, and you're going to be able to either buy more of your position at support or go into a new coin. So this is the first place that I would have taken profits, right in this area. Even though you're saying it went up so much more, why would you take profits there? Because I like to take my profits and get on to the next coin. This typically does not happen, this kind of crazy 20x breakout. So I like to take my profits right here, start taking them. If it keeps decreasing, I would continue taking more profits. Once I see this hammer right here, that's kind of a signal saying it's going to go up more. And then the volume started to increase again. So the second time I would have started to take profits is probably actually right here. A lot of people are saying that's so early. You're missing out on 150% more. I don't care. You made a lot of money on this trade. You can lose the money just as quickly. If you see right here, if you held these 2 days, you lost 50% of the value of the trade. And then I would just keep on taking profits, you know, small, just like closing 5 to 10% of the position, you know, all the way up, all the way down. And then I would probably close the position right here. This box would be me closing the position. Realistically, I would finish closing it right here. You know, you want to be sure that it's done going up. You can tell it's done going up by this bearish engulfing candle. I talked about this in my video 2 days ago. Trainovator, the 13 and 48 EMA, why do I use those? Excuse me. I was actually showed the strategy by Crypto Says. He is one of the best technical traders out there, him and M. Pavlotsky. And these two time frames just seem to work really well to decide when a trend is going to be changing. And the way we've been using these is you want to make an entry when the 13 crosses over and above the 48, and you want to be making an exit when the 13 crosses down below the 48. So using the strategy, we would have been in at 90 Satoshis and out at 900. It's a very, very safe trading strategy, and it is pretty profitable. And you'll see a lot of the times that this crossover will coincide with a Bitcoin run. How do I keep track of my coins? Well, I have a lot of my coins in cold storage. All the altcoins that I can put in cold storage, I do. I have all desktop wallets. I don't like to keep my coins on exchanges because not only is it dangerous, but the exchange should close down or halt trading. You know, like, for example, Bittrex has been really slow lately. It's kind of scaring me, and that's why I don't keep my coins on the exchange unless I'm going to be trading them within 24 hours. So I have 2 hardware wallets. I use hardware wallets for, first of all, I have one with my top 3 in the top 10, really, that it holds. Then I have a second one with a lot of my altcoins. Hardware wallets are really secure, and they're stored offline, and you can also back them up, and there's the phrase to restore them in case you lose it. Long-term holds is a bad strategy. Honestly, in my opinion, if you're holding anything long-term except Bitcoin, you're going to end up losing. If we look at almost any altcoin chart right now, I will literally just go through them quickly. Anything trading in terms of Bitcoin is significantly down. So if you're holding any of these long-term, you're just losing money. You know, that's why as soon as I see Bitcoin starting to break out, I just sell most of my altcoins. I don't even think I'm going to find a chart of a coin that's up recently because Bitcoin's been running and Bitcoin is king. Bitcoin is one of the only things you should be holding long term. My long-term holds are a lot shorter than someone else's. You know, a long-term hold for me is between 1 and 12 months. And that's not that long for a long-term hold. That is a short-term hold for most people, actually. And I use this time frame because that's the amount of time it takes for there to be some serious developments to come out and you to really make good profits. Did you look at Bounty OX? I'm actually not going to answer any questions on altcoins today. This is completely geared towards trading strategy. A lot of my YouTube streams, I don't want to answer questions about, did you look at this coin? What about this coin? Because that's really not going to help anyone. You know, if I do a lot of research on a coin, then I'll present it. But I want to just be helping people trade, you know, giving them different strategies. If Ledger S is somehow out of order, can we get our coins through the seed or 24 words? So you're going to need Ledger S to restore it, I believe. I'm not positive, but I'm pretty sure that the security is restored on the way it's restored is only on that device. I'm going to answer a few more questions. If anyone has questions about trading strategies in the comments, again, I'm not going to be answering questions about specific coins. What are the best sites for trading altcoins? So my favorite one is Binance.com. Binance is getting a lot of the new coins the quickest. They have some of the best coins on there. Oh, what's up, Sean? Good to see you in here finally. So if you don't have a Binance account, I would definitely recommend you make one. You know, they're just getting the most new coins. Bittrex isn't adding a lot of coins. So I would definitely open a Binance account. If you want, I have a referral link on my Twitter. You know, referrals help me out without costing you anything. That's why I always talk about them. They're just a good way to kind of donate to me without actually having to give me anything. So aside from Binance, I would definitely recommend having a Bittrex account. Those are the two main exchanges that you need. And then on top of that, EtherDelta is one of my favorites. I think EtherDelta is a way to get in coins really early and for good prices. Do I set price alarms? No, not really. I mean, I'm on here a lot of my day trading. You know, this is full-time for me now. I'm taking the semester off of school. So I don't set price alarms just because I don't really... I'm on here all the time and I see a lot of things. But price alarms are a really good way to pick coins up at the price that you want. One more thing I'm going to talk about actually is entries. So if you're using this typical or beginner portfolio, the most important thing for you is going to be your entry because you're going to be holding a little bit. And if you get in at a good entry, it's almost impossible to lose money, honestly, because if you're getting in at a strong support level, it's going to hold up pretty well when Bitcoin runs. So I'm going to talk a little bit about entries really quick, and then I'll answer a few more questions, then we're going to be done for today. Let's look at, we look at Golem. So for example, Golem, let's go to the 4 hour. So when you're looking at an entry for Golem, you see it's in this huge downtrend. Well, Golem's been in a downtrend too long, actually. That's not going to be a good example. What about Komodo? Komodo is a perfect example for what I want to do. Okay, so as I was saying, the most important thing if you're in that beginner or intermediate portfolio is your entry, because you're going to be holding for a little bit. So you want to find key support levels that you can enter at. And then you're going to want to just actually set buy orders at this level. So when I say start the position at 25% and then 25% and 50%, you don't need to be sitting there watching it every day. You can look at key support levels that you've seen. So if we're looking at Komodo, the lowest support would be right here. The middle support would be right here. And when you're looking for support levels, you're kind of just looking at where price fluctuates in between. So this bottom right here, this is strong support, and then your last strong support is going to be in this area. So, like I said, really important where you enter and you average down if it continues to go down. So using the strategy that I talked about earlier, you would buy 25% of your portfolio here. Yes, you would be down about 50% on it, but you're going to buy another 25% here. So your average is actually right in between rather than here. So you're only down about 25% instead of 50% once it starts to move. And then, you know, your last buy is going to be here. It might not hit, but you're going to want to keep that buy here. There might be a huge dump and your order could get filled. You know, it's just a way to trade really safely if you're new and you're getting your feet wet and you want to have a successful trading strategy. Do you stand up in the middle of the night if Bitcoin runs? I don't know what you mean by that, but I don't get alerts that Bitcoin's running. You know, if I wake up in the middle of the night and check the price and it's breaking out, then I will sell some of my altcoins. So do you mean cash out of Bitcoin within 12 months? No, I do not. I don't know what you mean by that, Greg. I haven't really sold any Bitcoin. I think we're just at the start and we're going much higher. So if Bitcoin goes down, alts go down and the same up. Not necessarily. If Bitcoin consolidates, which means that it goes down slowly or trades sideways, then alts will go up. If Bitcoin goes up or down really quickly, typically altcoins will just go down. So for example, the last few days we've seen this really steady consolidation of Bitcoin, and we saw alts do really well. And now that Bitcoin's starting to break up, all those gains were depleted. That's why I keep saying, as soon as I see Bitcoin start to run, I get out of my alts, because you just lose money if you hold them. You're gaining USD value, but that's worthless. You're just losing Bitcoin. So when Bitcoin's really steady and trading sideways like this area right here, this is when you're going to see the huge alt breakouts. When Bitcoin's going down pretty quickly, like here, you're going to see alts bounce a little bit, but they're not going to go up too much. You know, that's a really scary area for a lot of people, because they see their Bitcoin value decreasing so quickly and their USD value decreasing quickly. A few more questions, then I'm done. Binance now working with CoinG. Binance does work with CoinG. How do you organize which coins you're going to watch for a day? I research a lot of coins, and I start off looking at them fundamentally. You know, is there news upcoming? Is there updates upcoming? And coins that have news coming soon or updates coming out soon, I will be watching them nonstop. As soon as I get buy indicators from the technical analysis to back up my fundamental analysis, that's when I buy them. Yeah, thank you, Fernanda. I don't know who Matt T is. What is the problem with Coinbase where I can buy Bitcoin? Where I can buy Bitcoin other than Coinbase? I don't know what that means. All right, Greg. So you said something about your long-term holds for top coins are only 1 to 12 months. I assumed you meant that for mid-cap coins. Just wanted to clarify. So yes, for my long-term holds, I will be most likely converting them back into Bitcoin within 1 to 12 months. Once I'm at pretty good profits, you know, for a long-term coin, I want to be making at least 200 to 300% on it if I'm going to be holding it that long. So once I'm in really good profits, I will start to, you know, reduce my position, take some profits from the profits, and find another coin that I want to hold for a little bit. Obviously, I move my portfolio around a lot because I like to play the Bitcoin swings. I found that to be most successful for me. Any recommendation on the cold storage wallet? This is the last question I'm going to answer. Yes, I would recommend a Trezor or a Ledger wallet. Those are two of the best ones. I'm going to get off for today. I forgot to say this at the start, but everything I say in these videos is my own research. I'm self-taught. You know, I'm not a financial advisor, so make sure you do your own research and look at everything that I say, because some of the things I say could be wrong. None of this is financial advice, and I'm going to try and get on tomorrow as well. Tomorrow will be my last live stream for a few days because I'm going to be traveling, but I'm not sure what topic I will be hitting, so I will see all of you guys tomorrow.